Everyone, Art Trading here. Just going to go over the week of June 24th till June 28th. Just going to go over the setups that we took on stream. Couple ideas here and there. So let's get started with that. So Monday, June 24th was actually a nice start for the week, considering how the rest of the week went. So off the bat, after market open, we did get this 12-minute fail to close right here. So we had this validated swing low, wick below it, failed to close, and then we actually ended up getting a 1-minute CSS with immediate reprice right over here. So typically for this one, I like to go 10 and 10. I did go for 15 points on this, for the sole reason that we did have this 12-minute hidden S&D up here, which is that 12-minute wick. So typically, especially when price is spooling, and we get this immediate reprice of a CSS, this is going to be the overall draw. And then if, aside from that, this high right here is going to be the draw as well. We did have some low resistance liquidity right over here as well. So ultimately that became the draw. With this, like I said, instead of going for 10 points, I did go for 15, which was a nice start for the week. That on 1 mini, so that would be about like $300 per account off the bat. And aside from that, definitely Monday in general, actually for the last, like, I would say week and a half, the range and volatility has definitely been a little bit higher. But, you know, considering the range of these candles, we only took like about like 5 3/4 of drawdown, which is not bad considering the range. I mean, in my standards, this is just an immediate reaction off that CSS and literally hit TP within, I believe it was like 40 seconds, just going for 15 points. I could have gone for the middle of that hidden S&D, which would have been like 19, but I was more than okay with 15 points, considering usually we go for 10. So moving on to Tuesday, June 25th, we actually avoided a lot of losers. It was a break-even day. I'm going to go over that, but we definitely avoided a lot of losers. So after market open, typically like to wait about 10-15 minutes just for everything to settle down. There were a couple of CSSs, 1-minute CSSs to the downside. However, mainly looking at the higher time frame, you see on this 12-minute right here how we had a fail to close. So once you get this confirmed like fail to close, especially with the reaction off of that, even though it was around candle closed at 9:48 Eastern, judging by this reaction, you definitely don't want to short into these more so spooling moves. You definitely want to wait till structure really confirms. And once this failed to close confirmed, we were pretty much bullish for the rest of the day, going into the AM session, and then automatically these become weak highs over here, which most likely will get mitigated. So going off, we did take this one right here, which unfortunately was a break even. And when I say unfortunately, well, it did say the break even did say the loser, but our overall read on the draw on liquidity was correct. We were just one move a little too early. So once we had a 12-minute CSS flip confirmed and also a 72-minute CSS bullish flip confirmed as well, we were looking for bullish setups. We had this little move down, basically a retracement. Then we actually had a layered 1-minute CSS flip over here. We ended up taking this 1-minute CSS flip with the immediate reprice. Now, our break-even point, this one I was going for 15 points as well because the draw was definitely higher, which eventually did hit. Now, with our break-even rules, once it hits about like 8 points or 7 3/4, we'll definitely move to break even, because typically when the A+ setups that we do take work out, there isn't a reprice back into our entry. If there is, it'll typically be within the few points that it does move, just to give it that breathing room. So this one actually went 7 3/4. And originally, actually, I thought it did hit the 50% of this 1-minute hidden S&D. So I immediately went to break even, but when it goes 7 3/4 at 8 points is our break even, I am going to typically set it to break even. And good thing we did, because risking about 10 points over here, if it wasn't for that break even, that actually would have been a loss, and then eventually just pushed up to the overall draw on the liquidity. So like I said, one move a little too early. There was this CSS up here that came right after. Unfortunately, this actually, the range of this candle was a little bit too high in my opinion, mainly due to the fact that we take a 10-point max stop, and this could have easily just mitigated half of this candle, or at least this hidden S&D right here, and then move up as well. So we decided just to take the break even and call it for the day there. But overall, it was a good trade. Like I said, just one move a little bit too early for that. But like I said, we did avoid a few losers. Like, for example, this long right here. This actually would have been a straight loss. We were looking at this one, but the main reason we didn't like this one, even though bias was pretty much bullish, we did tap into this 12-minute hidden S&D after we failed to close above that high. So typically, even on the 1 minute, you see we get this fail to close above that high. We're going to retrace down into this weak low right here. So definitely not a good spot to be longing. 12-minute hidden S&D also was already mitigated, so the chances of it dropping and retracing was definitely going to be higher. So this was actually not a good place to long, which we pretty much discussed on the live stream. So avoided that one, which was good. And then apart from that, that was pretty much it for Tuesday. Typically we stop at 11:30 Eastern, but overall, you know, flat day. Nothing wrong with the setup. I would definitely take this 10 out of 10 times, and you'll see in the next few days, which we pretty much did, but they did result in break evens. Now moving on to Wednesday, June 26th, kind of the same thing. Avoided a few losers, which is good. It's never a bad thing avoiding losers. We did take one trade that ended up being break even as well, and I will go over that. First actual loser that we did avoid was this long CSS right here. Now, with this one, more so, even though we had a 12-minute CSS flip to the upside right here that we were pricing out of, so this 12-minute CSS right to the upside. So even though we had a 12-minute CSS flip to the upside, we were kind of pricing into 50% of this 12-minute zone right here that it created based on this close down here. Okay, so not that we weren't okay with taking longs, but in this case where in a sense you are counter trending on the higher time frame, we do want a 12-minute POI met before we engage in like a long setup in this case. So for example, even though we had a 1-minute CSS flip right here, which this actually would have been a loss, we weren't really in any 12-minute POI. We were actually in a 12-minute CSS flip to the downside that it was pricing off of. So it actually would have made sense to be playing a short out of this area here. Okay, but based on this movement, we did identify this as just a retracement. So we avoided that one. We did create this swing high over here, which could be a draw, especially when you have this internal over here as well. Now, same thing as Tuesday. We were like one move a little too early regarding the trade because of overall drawn liquidity was going to be up here, which eventually it did meet. Now, going off to what we were seeing, we did have this 1-minute hidden S&D layered inside this 1-minute CSS flip as well. Now, we did price into this hidden S&D. We did not tap 50% of it, as you can see here, and I kind of knew off the bat this was going to be an issue because hidden S&Ds particularly love to be mitigated at the 50%. Even if it's a tick away, these will typically be induced and then push up from there, which that's what it did. So we did have this 1-minute CSS flip right here. Obvious draw was actually, I would say, this internal, which was more than enough room for 10 points if you're going for 10, or even 15 up here would have been nice as well. But let's say if you're just going for 10 on that one, this was more than enough room. So what happened was, had the CSS flip up here, this pushed up about 9 points, which 8 point is our break-even mark. It did also have a reaction off this 1-minute hidden S&D, as you can see right here. See how it tapped a little above that 50% and had a reaction out of it. So that went to break even, which if it didn't go break even, it would have stopped us out anyways, because it eventually induced this low right here, which would have been the 50% mitigation of this hidden S&D. And then eventually, like I said, just like Tuesday, went for that draw on that liquidity. So break even again, but break even did save a loss, which is good. So far at this point for the week, we were still up one trade, which is still not bad at all. And considering the fact that the 2 break evens did save losers, which, you know, in my case, I would always say defense is always going to be the best offense. You know, you should be in that capital preservation mode at all times. You don't want to trade going against you, because typically with the trades that we do take, there's immediate reactions out of, and TPs typically will get hit within that 1 minute candle. Aside from that, that was, you know, pretty much it. As frustrating as it was, all the setups so far I've said, whether it was Monday, Tuesday, Wednesday, within that 11:30 window, the ones I've been showing that we did take have been the cleanest ones, in my opinion. You know, just based off the 12-minute areas, the 1 minute structure, the obvious draw and liquidity. So, you know, other than that, really, it goes in the market's hands when you are entered into the trade. Now, moving on to Thursday, June 27. This is a little bit of a heartbreaking day for me, but it is what it is. So it's a break-even day, but I'm just going to show you the trade that we did take. There was a couple entries mechanically on CSS flips. There was a few winners, but nothing in a high time frame POI that I personally would like to engage in. There was one I did particularly like, was this long right over here. I'm just going to go over it real quick. Say we're going for 10 for 10. I hate it when it does this. Okay, let's say you're going for 10 for 10. I did like this long. Reason being is we did have a bearish 12-minute CSS that was going to form right over here. Okay. However, in like the last minute, this failed to confirm this 12-minute CSS bearish flip to the downside. Now, when that happens, typically that's going to result in the price indicating that it wants to go higher. So typically like maybe sweep this high right here. As you can see, it did, but we were okay with engaging it along. Now, this was not a bad setup. Mainly also we were in layered 1 minute CSS flips. So meaning multiple CSS flips in one, as you can see over here. So there was a double layered CSS 1 minute CSS flip that it tagged into to the T and set up a CSS flip long. My only issue with this one, and we pretty much agreed on stream, was when you're risking 10 points, and like I said, candle ranges were definitely higher in this last week and a half. When you're risking 10 points max, and there's this unmitigated wick, the hidden S&D, and your stop is at near that 50% area, I personally don't like to engage, because reason being, you could be right in the direction, but this could easily wick you out right over here. So 50% of it would have actually been at about 9.25 points. So 3 more ticks out of that would have wicked you out just for it to run up. And I just didn't want to be caught in that situation. If it was something in regards to like 10 points was like around here where it covered majority of that wick, I would have been okay with this. But this was a little bit tougher, even though it did work out. And in my opinion, this was a really great setup. It was just mainly this part right here. But that would have been an instant winner. And that's what I'm talking about, is usually when you get these immediate CSS flip reprices, the TP is typically going to be within that 1 or 2nd candle. So it shouldn't have a reason to come back down. That's why we have our break even a little bit tight, which I would prefer. And then the second setup, which was actually a very nice setup. This was A++. We did have this 12-minute fail to close up here that confirmed. So typically when that fail to close occurs, it's going to generate weak lows. Okay, even though it didn't sweep this low down here, we still had the swing low over here. So we still have that internal, or at least over here minimum, this would have been swept, which it did. So we had that fail to close on a 12-minute. We were in a 12-minute fractal as well. Okay, 12-minute fractal. We had a fail to close on the 1 minute. Now, even though there is a wick here, and AP explained this on the stream live, when there's a inducement and a fail to close, as it did over here, chances are it's not even going to go back to price into that wick compared to this, because there was not really an inducement here of an internal low. But when there's this internal high that got induced, price should not be referring back. This should just create a massive, I wouldn't say massive, but just spool down, which it did. However, let me break down what happened during the trade. So we had this fail to close in the 1 minute. We had a CSS flip. Entry was here. This tagged 8 points. I think it was 8.25 points. Pushback. So we entered in here. Tagged 8.5 points actually, right here. Pushed back up to entry, so it took us out for break even, and then decided to spool down from there. So very nice setup. With the volatility this week, it was creating these random wicks in these areas where it shouldn't, which, you know, that's okay. You have to adapt to the market anyways. But originally with this, I was actually going to go for 15 points. Reason being is because this internal low right here was definitely easy spot for a draw on liquidity. But that was it for Thursday. You know, a little bit frustrating in a sense. You know, we had a good Monday, and then Tuesday, Wednesday, Thursdays were break evens at all three. I would say specifically more so this one here. I was very comfortable taking this one. I did not even hesitate. And this was pretty much the move that I saw coming. It's just a matter of that break-even point, which it did. But like I said, the break-evens this week definitely saved more on the losers than it did on the winner. You know, and that's just going to happen. Nothing wrong with that, but nothing that needs to be adjusted for sure. And other than that, especially after something like this where it's such a good setup, we just didn't even bother with anything else. There was this short down here on a 1 minute CSS flip, which wasn't bad. It did have a fail to close at an inducement high. However, main thing with this is we were not really in a 12-minute POI. Okay, so we almost had a fractal confirm, which would have been right here. However, this didn't confirm that fractal. So this body was supposed to close below this wick to confirm that fractal. If that was the case, I would have been fine with actually taking this trade if that fractal confirmed. But since that fractal didn't confirm and we were pricing into this 12-minute hidden S&D as here, not that price wasn't going to remain short-term bearish, but this could have easily come up here and taken this high or just rebalance an unmitigated area. So it was a little bit riskier than I would like, even though trading is risk, but it's a matter of managing that risk as well. That was it for Thursday, June 27th. And then moving on to Friday, the 28th. Friday, we just did not engage in anything really. Didn't like much of anything. We just had this massive rally up and then this massive rally back down. Especially when, you know, typically with the higher time frame, we do have a decent read on it on a daily. Today was on Friday was a little bit tougher. More so, we were kind of looking at longs in these specific areas, but nothing really set up to our liking. Going down to here, the only thing I was looking for is two things. If we had a inducement up here, specifically more so because we had a 12-minute CSS flip to the downside and we started creating bearish fractals, that's going to indicate some sort of deeper retracement, right? So one thing I was looking for, if this created some sort of inducement up here like this, and it created a 1 minute CSS flip to the downside, I would have been more than okay with taking something like that in this area. And then the second spot I was looking for, I actually said this on stream, and it played out 90% of the way, but you know, just that 10% of that part that didn't work, I just did not like. So we were pricing into this 12-minute fractal over here, which is this gray shaded area. And I said earlier, even before this move happened over here, I said if we induce this high, this 1 minute high, and get a fail to close, so wicks above it, closes back in the range and sets up a 1 minute CSS flip, I would have been more than okay with taking that. But my main problem with this is we closed above this high, even though we were in that 12-minute fractal. Judging based on how Friday was also going, We were in that 12-minute fractal. We were in this 12-minute hidden S&D, which at the time also looked like it was having a reaction out of. So we could expect sometimes a little bit of a deeper retracement. We did not get the fail to close there. However, it did set up that 1-minute CSS flip to the downside. But this is something I don't like, and this is something I will not take, is when we have equal highs on that CSS flip. So two things. Not a fail to close. More so, even if it didn't fail to close, I would have been, it's a little tough to say, I would have been probably okay with still taking it. However, this was the main indicator to back off, even though the trade worked out on this 1-minute CSS flip. You know, if you're risking 10, going for a 10 or 15, however you feel comfortable with, or the low. I personally do not like when these CSS flips give equal highs or equal lows, because typically this will also get ran first before going back down. Now, even though equal highs and equal lows are going to target an opposing side, mainly with this 1-minute CSS flip, these typically do get ran a little bit quicker. So that's why I decided to step off from there. And that was it for Friday. So not a bad week. I mean, my overall goal for the week, personal goal, is about 0.5% to 1% gain on each account, which typically this was a little bit more than 0.5% gain for the week, since on Monday it was a 15-point TP. So that would put me like 1.5 R for the week. So not bad. It was just more so the frustrating part of that Tuesday, Wednesday, Thursday, when at least one of those had the potential to be another green trade. But, you know, rules were followed to a T, risk management was followed to a T, and that's really, really all you can ask for in regards to just trading your system. As long as you follow the rules, execute it to your trades, that everything else is going to fall in line. But thanks for joining. Thanks for watching in. But if you have any questions, definitely feel free to message AP or myself. We have our Discord link down there too. So any questions, ask away. Enjoy the rest of your weekend, folks, and I'll catch you next week.